But at Fundstrat, Sean Farrell is the head of digital assets research, and he's given me some informal sort of targets. One way he thinks of this is that if we look at Circle and its free cash multiple, which now is like 130 times EBITDA, on an equivalent basis, Ethereum is closer to 15,000. I think in the near term, our technical strategist Mark Newton thought we could be seeing 4,000 for the end of the month for Ethereum, but that's not where it peaks. He just thinks that that's the first target. And then I think something, if Sean Farrell's math is correct, then I think 10 to 15,000 actually makes sense too. By the end of the year, yeah, it could be end of year, could be sooner. I mean, it just really depends. But and again, that wouldn't be the cap, but that just shows you that's really a level above 5,000. It would be a decisive all-time breakout for Ethereum. So I think that's a significant level to watch as well. Now that Tom Lee is getting more and more involved in the crypto space, he's bringing a ton of new insights for you guys that I think are going to be incredibly valuable. But one of the most important points that we're going to be discussing in today's video is the role of stablecoins and their impact on the actual price appreciation of crypto assets on which the blockchain, those stablecoin transactions, are being hosted on. Now, Tom Lee here was talking about Ethereum-based price appreciation due to USDC and USD-based transactions happening on the Ethereum network, which is where the vast majority of all of those stablecoin transactions do happen. But I want you guys to think about something. If it's possible for Ethereum to go up 5x in price because of stablecoin transactions happening, that being the only catalyst, what do you guys think is the possibility and the type of price action we can see for XRP? Because of USD mass adoption? USD mass adoption. Well, the answer is going to surprise you because we're going to be diving deep into that in today's video. But real quick, before we get into that, I just want to mention that my private free trading group, Crypto Crusaders, is accepting new members where you guys can leverage and get access to all of my trades, every single entry that I make. And I've had access to make up to 400% single month gains on multiple different occasions. It's very easy for you guys to get in. Go to my website down below, follow the 3-step process once you're done watching the video. Let's go ahead and see what Tom Lee has to say. Ethereum is a chain that I think is getting a second look. I know that there have been criticisms of it in the past because of either how layer 2s and layer 1s interact or just really sort of progress and upgrades to the network. To us, I think the real thing we have to, as recognized as we look at what's happening in the real world, is that Wall Street is converging onto crypto, and they're choosing to do a lot of this work on Ethereum because stablecoins have completely changed Wall Street's mind about how useful crypto can be. As we said, the stablecoins have created a ChatGPT moment for crypto, because we're seeing consumers really use it in a viral way. Merchants are beginning to really love it, especially outside the US. Now banks are realizing it's actually a decent business model. We just saw a Citigroup even just say that they're looking at creating a stablecoin, even if it's just a managed deposit base. Still, is really Wall Street converging onto crypto? And at the end of the day, a couple of things are going to be important. Wall Street wants to find a chain that's operating compliantly in the US, and they want to find a big one, where there's already a lot of real-world assets tied up and on the layer 1, and that's why Ethereum, we think, is going to become extremely relevant over the next decade. You think that Ethereum can keep up? Yes, and they just have to create the right incentives between the layer 2s and layer 1s, and make sure there's just not too much gas out there, and that we can absorb that supply. But I think that's where these treasury companies are playing a pretty important role, and they're earning money staking. I think the reality is that if there is a rejuvenation of interest around any token or any token platform, it also rejuvenates people's creativity and interest in making it more usable. So to us, this ChatGPT moment, which is converging around Ethereum, I think is going to also help unleash a wave of innovation. It's no different than when ChatGPT first swept across Silicon Valley. And this is after everybody had invested decades on SaaS, but guess what? Now, there's many venture-funded businesses around using AI and ChatGPT that are exploding and getting to $100 million run rate so quickly. Well, I think that's what's going to happen in crypto. I think this is a really big moment for the industry to realize that as Wall Street converges and they're bringing a lot of interest and bringing a lot of new users and a lot of new applications, that this could transform actually the importance of smart contracts and ethereum. So I think Ethereum's dominance could actually grow dramatically. What's your price target for ETH as we head into the second half of the year? Our price objective is at Fundstrat, so I wear a couple of hats. I'm the chairman of Bitmine, but I'm also the head of research at Fundstrat. And actually, I have a third role, which is the CIO of Fundstreet Capital. But at Fundstreet, Sean Farrell is the head of digital assets research, and he's given me some informal sort of targets. One way he thinks of this is that if we look at Circle and its free cash multiple, which now is like 130 times EBITDA, on an equivalent basis, Ethereum is closer to 15,000. And that makes sense. Think the layer 1, as you get into layer 1. You should apply a higher multiple to like sort of theoretical usage, because it's the same reason software companies get higher multiples than retailers, right? The more you're getting away from the customer and the more it's pure signal, you apply higher multiples to that business. And so I think in the near term, our technical strategist, Mark Newton, thought we could be seeing 4,000 for the end of the month for Ethereum, but that's not where it peaks. He just thinks that that's the first target. And then I think something, if Sean Farrell's math is correct, then I think 10 to 15,000 actually makes sense too by the end of the year. Yeah, it could be end of year, it could be sooner. I mean, it just really depends. But and again, that wouldn't be the cap, but that just shows you that's really, a level above 5,000 would be a decisive, all-time breakout for Ethereum. So I think that's a significant level to watch as well. So at the core is our belief that Ethereum is dramatically undervalued as a token. And for the reasons I described, that crypto is seeing its chat cheap YT moment, and really the second order beneficiary there is Ethereum. Ethereum. So acquiring an asset that can appreciate by 10 times or more is a really good use of a treasury. In fact, MicroStrategy, when they began their treasury strategy, Bitcoin was 11,000 and it's 120,000 today. And so I think that's foremost where we're coming from. And some people say, well, why don't you just buy Ethereum outright? Well, an Ethereum treasury company can actually increase your ETH holdings per share by taking advantage of capital markets and volatility to raise capital. And they can also earn money from staking. For instance, Bitmine initially funded with $250 million of ETH, and that was closed on July 9th or July 8th. And then 3 days later, Bitmine increased the treasury holdings by an additional $250 million. So in just 3 days, doubled the amount of treasury holdings, and that was as of Friday last week. So you can see that there is an advantage to a treasury company, because what you thought you had was of ETH relative per share just doubled in 3 days based on just the company acquiring more Astoker. And of course, that activity continues. So I think that there's an advantage to owning a treasury company that is using capital markets to increase your ETH holdings per share. When we really break down what Tom Lee is talking about here and saying, at the real core of it all, what we're seeing is that stablecoin adoption and usage from large financial institutions and banks is going to be what he believes and what I believe to be the next big wave in the crypto industry. And so the number one most important thing, and the question we should all be asking, is which blockchain? Are these banks going to decide to issue their own stable coins on? Well, what they're looking for is functionality that allows them to execute smart contracts in a way that serves their customers, in a way that they can also make money at the same time, more so than they're making right now. And so that's why these banks are making their own stablecoins right away, because they realize this is a great business model, and this allows them to actually exponentially increase their revenues. But we also have to make sure that these banks are fully aware of which blockchain is going to serve them the best. Ethereum, yes, it does have great decentralized applications, smart contracts, and many other things, but So does the XRPL. The XRPL is now being built up from the ground, and getting added all this interoperability